Welcome back to the International Wealth Builders Radio Talk Show. I am your host, Michelle Estelle, the homebuyer coach on KCAA Broadcasting Network, 1050 AM and 106.5 FM. We are affiliated with CNBC, NBC News, NBC Sports, and we cover over 5 million households in the greater Los Angeles area. If you've missed any of our previous shows, you can watch us on TV streaming channel distribution, Roku TV, Amazon Fire TV, and Android app. All you have to do is subscribe to the Building Solid Foundations channel. So in the last segment, we discussed when is a good time to buy, or is it a good time to buy? And basically, my answer is it is only a good time to buy when it's right for you. No other market will dictate whether it is time to buy except for the preparation that you've done and if you are ready and prepared to buy a home. In this segment, we're going to go over the second question that I am often asked, and that is, what are interest rates going to do? And are interest rates going to go down? The funny thing is that no matter what the interest rates are, the question is always if rates are going to go down. Or the statement is that they're going to wait. A buyer, my clients, anyone in the market are going to wait for interest rates to go down. Now, that is always on a relative scale because I've been in the business long enough to have seen double-digit, extremely high interest rates. And I've seen some middle interest rates, 6.875, 7%, and I've seen 2.25. So we've seen a lot of interest rates, and when they were double digit in the 80s, let's say they're 11, 12%, 8% would have been a great interest rate. Even 9.99 would have been a great interest rate because it was relative to where the market is. When we had rates that were in the threes, people were waiting for them to go down. In this case, they did get into the twos. And even when we were in the twos, there were still people who thought maybe the interest rates will go down. So it's definitely a relative scale. Right now, I would say this is all in generalities. There is no one rate fits all borrower. Your rates are dependent on your credit score, your down payment or loan to value. How much is your loan in relationship to your value? What type of program, and even what type of property. So your credit score, your down payment or loan to value, the type of property, and the program that you are going to utilize to finance your home. All of those go into what your interest rate will be. So there is no one size fits all, but let's just say in general, we are in the solid sixes in most all products, 6% interest rate at this time. 40 years ago, like I mentioned, in the 80s, we had quite high interest rates, and what we also had was high inflation. And so we are in an inflationary market. The inflation is high, and now rates are high. The feds are increasing the Fed rate. The Fed rate is not the interest rate, is not mortgage interest rate. The Fed rate is the overnight rate that the banks are charged for borrowing money, or charge each other borrowing money. And obviously, if they're paying more for money, this is going to also affect other types of financing and interest rates. But there's many other things that also go into calculating what the mortgage interest rates will be. All different types of economic news will affect the market, which affects bonds, which affects a whole bunch of other things. And then interest rates are then also affected. So the key for this year is, will the feds be successful at reducing inflation with their plan of increasing the Fed rate? If they're successful, which many people believe they will be successful, and that belief is a really strong 75, 80, 85% chance that they would be successful in reducing inflation with their plan of increasing the Fed rate. If that happens, then we should see some calming down of the interest rates, and we should land somewhere in the fives. Maybe the fours, but my own prediction is let's just be in the fives. So the other thing that could happen, the 10, 20, 15% chance is that the feds are not successful at reducing interest rates anytime soon. I'm sorry, reducing inflation anytime soon. And so their plan would be to continue to increase the Fed rate. If they do that, we may see rates in the 8 or the 9%. So at this point, it can go either way, but there's a strong indication that they will be successful at helping to curb inflation and to reduce inflation. And then we will see we might be in a recession, a small recession, and we go from inflation into recession. And then we'll see some stimulating the market and we'll see rates kind of calm down, maybe in the mid fives, maybe in the fives. But one more time, I want to say this, there is a chance that it won't work and we could see rates that are in the 8 or 9%. We even have some products right now that do have rates that are double digit. And those would be for a very special type of program. And those rates could also go higher. But right now, that is what affects the affordability. So in my previous segment, I was saying that any market is a good market to buy in if you're prepared and if you can afford it and you find the house that you want, you should buy. Because the way that you finance it now may not be the way that you finance it over the long term. And you still could be in a great position holding that home for 7 to 10 years. So with interest rates, of course, the one challenging thing is that with the current price of homes and a higher interest rate compared to when the rates were lower, your mortgage payment now could be $1,000, $1,200, $1,500 more than it was at a rate of 3 or 4%, of course. So if you have a rate of 7 or 6 and you used to have a rate of 3 or 4, that same home will cost you about $1,000 or maybe $1,500 more on a monthly basis. So that could affect your affordability. And that would be the only thing that could make it more difficult for you to buy, even if you're ready in this market, finding the property that you like and being able to afford it. Now, that may mean that you need to move to a place that's more affordable. And anywhere that you could buy that is affordable, the same things will occur even with the interest rates high, is that you over time will have amortization and appreciation. So again, if you buy that home for a long term, it's still going to be worth buying. It also does something very particular as far as taxes go. When you are paying more interest, you can meet that threshold of an itemized deduction. And that itemized deduction now helps you to reduce your tax exposure. And then you actually get more money on a monthly basis. You're able to keep more of your income and not pay it to taxes when you can do an itemized deduction. So if there's any silver lining or positive to having higher interest rates, it is in your taxes and that tax benefit that it gives you by being able to show more interest paid and potentially, because I'm not a tax preparer, to potentially do an itemized deduction instead of the standard deduction, which helps reduce your taxable income, which helps reduce or mitigate your tax exposure or the taxes that you have to pay. So that means more money in your pocket, and that is a tax benefit. So we always have to look at the silver linings, and these are definitely silver linings. And the main thing that I would say about interest rates is definitely everybody looks at it on a relative scale. Gas was costing us $7, now it's maybe $4.70, and we think that's great because it went down. But it's really not great because we had gas that was under $3. So, it's all going to be relative, and don't try to play the market. Just prepare for home ownership, and if it's right for you, you're going to have to go with what the rates are and the housing prices are, and if you could afford it, get in. One of my friends said, don't wait to get into real estate, get into real estate and wait. And I agree 100%. If you are buying shelter for the long term, at least 10 years, you're going to do just great. Now, obviously, having stable income, stable employment, and having a great budget and paying attention to the things that are important, that's really going to help out. So in the next segment, I am going to cover a little bit of this section one more time when we talk about credit and affordability. And then we are going to talk about where we think home prices are going to go, because the third thing that you all are always saying is, I'm waiting for house prices to go down. Well, we're going to talk about that in the next segment. Thank you so much for joining me on this segment. And remember, if you've missed any of our previous shows, you can go ahead and look at some of the recorded viewings of our previous shows on our TV streaming channel distribution on Roku TV, Amazon Fire, and the Android app. All you have to do is to subscribe to the Building Solid Foundations channel, and you can see some of our other amazing shows. So I look forward to seeing you after this break, and drive safe until we come back, and we will talk to you soon.